all the programs offered to you here at Funded Trading Plus operate in a simulated environment using virtual funds. There's no real or regulated capital traded in the markets. And any payouts are calculated from simulated profits in line with our program's terms and conditions. My name is Andrew Lockwood. I'm a veteran trader of over 35 years. I spent the 20 odd years at the start of my trading career in the trading pits in the city of London. There we were, shouting, screaming, throwing around literally hundreds of thousands of dollars on a daily basis with our brightly coloured jackets. Truly fun times that was. Now on this channel, I'm basically covering all things trading. Forex, CFD, stocks, anything about trading. We talk about trading strategies, talk about trading psychology, and how to stay sharp in these fast moving markets. Now today's video is all about something that I think separates the serious traders from the gamblers, and that's keeping a solid trading journal. Now, most rookie traders that I've worked with over the years, before they met me, they were spending all their time and all their energy looking for that magical trading strategy, which by now I'm sure you'll have found doesn't exist. They spend less time, if no time at all, on working on the process of being a trader. Now, if you have followed me for any length of time, you'll have heard me say countless times, if you want to succeed in trading, you need to treat it like a business. Keeping a trading journal is an essential part of that process. If you're not tracking your trades, you're basically flying blind. It's simple as that. Now, trading, as we know, it's all about taking risks in the market. We all have winning trades and we all have losing trades. It's part and parcel of what we do. Losing trades normally results in money leaving the account. Now, for most rookie traders, that doesn't feel very good, but as I say, it happens to all of us. It should not be, in my opinion, wasted. We can learn from it. Now, I'm not saying that just because you're having a losing trade, you did something wrong. Chances are it was a perfectly good setup, but there are practices and processes that often repeat themselves that can make up a significant amount of those losses, and they can be identified and therefore worked on. Now, trading journals, not just a record, it's your personal data bank. It tells you what's working and what's not, and most importantly, why. Now, of course, you can compile your own trading journal on an Excel spreadsheet. You can purchase external third-party software. We could use good old-fashioned pen and paper, although I think that is the least preferred approach. It'd be much harder just using pen and paper to track and see these patterns of behavior. Now, the more you include in your journal, the better. So here's going to be a list of things that I think are the most important things you can include in your journal. But remember this, your journal is only as good as the input that you put in. Be honest, be truthful. No point fudging the books, because ultimately you are the one that's going to benefit from this, or you are the one that's going to basically waste your time doing this. Right, here's the list of things I think you should include. Not exclusively, but I'm sure you can come up with others as well if you think something is more pertinent to you. Come on. Okay, so here are some examples of what I think you should include in your trade journal. Now, usually speaking, the more you include, the more you monitor, the better. So starting off, we think you should include the date and time of the trade. I think that's pretty obvious for most. And then we need to have the strategy name. I think it's always good to name a strategy so then you can identify with it more. It becomes more sort of personal. I do personally think you shouldn't have multiple strategies, maximum 3, certainly when you're starting off. One maybe for trend, one maybe for counter trend, and maybe one for when the markets are consolidating. The pair or the instrument that you are trading, whether you're trading commodities, just Forex or indices or what have you. The time frame, are you on the 5-minute chart, the 15-minute chart, the 1-hour chart? This is really quite important. Direction, long or short, were you buying or were you selling? Again, when you compare this with other metrics like the instrument, sometimes buying only the indices may for you have worked better, but you don't know until you journal it. The entry price and the intended exit price. And the lot size, the position size, I always say that you should maintain a predetermined amount of risk on each trade. And of course, that will mean you need to position size accordingly to lock in that predefined risk allocation. Setup grading. You should grade your setups, A grade, B grade, C grade. I don't know if you should be taking C grades, but if setup really is the perfect setup, best you've ever seen, aligning with the fundamentals, maybe that's a higher grade setup. And maybe you might want to have a higher risk allocation when you have a grade A setup than a grade B setup, where maybe not all the criteria has been met. The percentage risk used, as I said, always use, I think, the same percentage on each trade. That way you'll be able to compound the account. Compound is a great way to grow the account, great way to protect the account in drawdown. So using percentage risk, I think, is the preferred way. The result of the trade, the profit and loss, did it make money or did it lose money? Clearly that's important. And any mistakes that you've made. Now you need to be honest here. Did you enter too soon? Did you enter too late? Exit too late? Did you revenge trade? Any mistakes that you think that you basically can assign to that trade, get it written down, because after a while you're going to start to see patterns of these mistakes. Notes on psychology. How were you feeling? Again, this is a difficult one sometimes, but were you elated? Were you really fed up and annoyed because it just missed your profit target and then hit your stop? All the notes on psychology, because when you review this on the weekend, then you'll see these notes on psychology, and when you review the journal, it will be really, really useful for you. It'll be like gold. And also, if you can, screenshots of the trade, which is why I think it's better to use technology, either Excel or third-party software, so you can actually see the trade setup, and of course the stop loss, and take profit levels as well. Now, once you've started to journal these trades, you should be able to come up with some data as well, the metrics on how we can gauge how our trading, how our strategies are doing. I do have a separate YouTube lesson on metrics, but here's basically the metrics I think you should be gauging to evaluate your trading progress. First off, your average win and your average loss. The cumulative profit and loss, I think, of course, that's important. And of course, the drawdown. Drawdown is very important. Certainly if you're trading prop money, you need to be on top of drawdown. The profit factor, get that in there as well. It's basically the average profit divided by the average loss is your profit factor. Then you've got the expectancy as well, another key metric that traders use in their trade evaluation. If you're unclear of these metrics, of course, you can watch my other video on trader metrics. Consecutive wins, consecutive losses. I think this is a really important metric. I've seen traders in the past throw out perfectly good strategies because they've had 4 or 5 losing trades. But if you know that your back testing results have shown maybe 8, 9 losing trades in the past, and it's been successful over the quarter, well, there's no reason to throw out a perfectly good strategy. To keep on track of that, if you're having maybe 15 losing trades on the bounce and you're only used to expecting to have maximum of 8 or 9 or 10, then of course maybe that's the time to reevaluate that strategy or the way you're implementing it. Risk to reward ratios, really important metric. Getting to understand what ratios are working best with which strategy is really, really powerful. You may be on a 1-to-1 risk reward ratio on certain strategies, or 2-to-1, 3-to-1, or what have you. But getting to know what fits the strategy is really powerful data. The best and the worst pair or asset class. The best and worst days of the week. Doesn't really affect my trading too much, but I've seen traders in the past that can't trade at all on a Monday. It takes them a couple of days to get into it. Some people have struggled to trade on a Friday because their emotions are worse because they've either made their profit targets or they haven't made their targets for the week. So if there's a trend developing in the days of the week, well, we want to know about it. And lastly, the best and worst time frame. Are you working best on the 1-hour chart or the 4-hour chart? So these are the metrics that I think you should be monitoring inside your trade journal. Okay, so there you have it. There's a list of what I think are the most important things you should include in your journal. Remember, be honest. Not exclusive points. There's other things, of course, you can include as well. Things that you think are relevant. Keeping screenshots of the charts as well. Very, very important. Here is an example now of a trade journal I put together, actually just on Excel. You can get your hands on this as well at some point. More about that later on. But here's a quick example of my journal. Okay, so here's an example of a trade journal. This is one I put together on Excel a while ago. I filled it in with dummy data. This is not real trading data. It's really meant for just demonstration purposes. You can see everything is quite self-explanatory. I've got the strategy name, the symbols, the trading style, intraday scalping, 15-minute time frame, 1 hour time frame, the grading that I mentioned there, buy or sell date, and of course you've got the lot size and risk as you would expect. You've got the cumulative profit and loss, and you've got the account balance, and of course you've got the all-important drawdown in here as well. But I think this is the most important part of a trade journal, and this is where you get to be honest about your trading. I've actually put in some drop downs here on mistakes. You got bad stop placement, bad risk to reward, stressed out, fear of missing out, broken the rules. You can add, of course, these in if you've got some more mistakes that are becoming more sort of common. And then, of course, you've got the comments as well. This is really powerful when you look back to see how you are psychologically feeling at the time. So once you've completed that, sometimes if you're trading on the lower time frame charts, you might not be able to complete it at the time of trade, but having a sort of a notepad and then filling it in at the end of the day is the way to do it. Once you have that, the Excel spreadsheet basically collates all the information, and this is where you get the power of the trade journal. You get to see the equity growth, you get to see the win-loss ratio that I spoke about, consecutive wins, consecutive losses, the grading, which trades are working out to be the best time frames as well that you're using. Again, this is dummy data, so don't take too much attention to the actual numbers, but here you've got the profit factor, the strategy expectancy, the P&Ls per the different strategies as well, the days of the week, and so forth. And here you can see the different mistakes. The one here, bad stop placement, is coming up to be the biggest problem on this dummy data. So when you've got this data together, it becomes really, really powerful on your trading journey. And the other tab I've got down here is charts. This is where you upload the actual screenshot of the chart. So the entry, the exit, anything that you think is relevant to the trade, so that when you come to review, it's all there in one place, clear and simple for you to see. Now, here's the thing about a journal. It's not about being perfect. It's about being aware. If you review your journal weekly, you'll start noticing patterns. Maybe you overtrade after 3 p.m. in the afternoon, or maybe your losses come when you break your trading rule. The insights are going to be pure gold for your trading business. And as I say, the more you include, the more powerful it will be. But above all, be honest. If you're not going to be honest with yourself, you may as well not bother and just have a punt in the markets and keeping those fingers crossed for success. Now, if you want to get yourself a copy of my trade journal, which you can use in its standalone version or used in helping create your own journal, you can do so absolutely free in our education material. You just need to use the coupon code PROPIQ on the checkout on any of our assessment accounts of over $50,000. All there for you, alongside 50 plus hours of video content as well in our trading. The trading opportunities that we now have in trading prop money are absolutely huge. If you do things right, if you treat it seriously, then you really can have a wonderful career ahead, where you are in control of your time. As always, if you like these videos, give me a thumbs up. If you don't, give me a thumbs down. And don't forget to leave a comment. Anything you want me to cover in subsequent videos, let me know. I do read all the comments that come in. And of course, don't forget to subscribe to the channel. That way you'll be notified the moment I release the next education video here on the channel. Rooting for your success. Speak to you soon.